Hi everyone, and welcome back to another edition of Pizz-Spectives. My name is Rob Pizzichetta, founder of Mont Wealth, and today we're talking about something that's changing faster than most of us can keep up with: the future of commerce. How we buy, sell, lend, move money, and even manage cash flow is being rewritten in real time. And behind this transformation are two powerful forces: artificial intelligence and digital money, particularly stablecoins. By the end of this episode, you'll have a clear picture of how these technologies are reshaping businesses across Asia and Australia, and how it's all quite different from the traditional systems we grew up with. Now, let's start with the big picture. Now, global growth this year sits at around 2.9%, not spectacular, but Asia is the clear standout, growing nearly 5%. That's twice as fast as the developed world. And remember, more than half of the world's population lives in Asia, along with over half of the world's listed companies. Now, in practical terms, Asia has become the engine room of innovation. India's instant payment system, UPI, now processes over 18 billion transactions every month. That's more than 400 transactions every second. Singapore saw cross-border payments jump 30% last year, while South Korea was the first country to launch nationwide 5G. And this explains why we want to allocate to emerging markets and Asia in our growth portfolio. Now, here in Australia, growth is slower, around 2.3%, but the digital economy is powering ahead at 7% a year, roughly double the pace of the broader economy. That's been driven by entrepreneurs, small business, and platforms playing directly into global digital rails, platforms like Stripe. Now, we dialed into Stripe's Future of Commerce conference, where we learned Stripe's processed US 1.4 trillion in payments last year, up 38%, with over 1 million Aussie and Kiwi users on the platform. Now, that's a pretty good sign that commerce here is being rewired, quietly but fast. Stripe also highlighted how AI is revolutionizing finance. Now, for most people, AI still feels futuristic, something you may have tried on ChatGPT but maybe not incorporated in your business yet, but it's already doing the work that humans used to do. Things like customer service, data analysis, and product recommendations. Now, instead of a person reviewing transactions or responding to every support email, AI systems can do it in seconds. Think of it as going from people-powered process to machine-assisted precision. Across Asia, the AI industry is expected to grow 40% to over US 1.3 trillion within a decade. The region is home to more than 2,600 AI startups, second only to the US, and China alone makes up 70% of the region's AI investment. But what's really interesting is the speed. Startups that used to take years to hit the first million in revenue are now doing it in months. On average, new AI companies using Stripe are hitting US 5 million in annual revenue within 9 months. And in Australia, 70% of business leaders say they're already using AI somewhere in their operation, whether it's product design, marketing, or client service. Adoption of Stripe's AI developer tools here is the second highest in the world, behind only the US. Traditional processes used to rely on humans analyzing spreadsheets, manually reconciling invoices, or approving loans. Now, AI handles these steps instantly, leaving humans to focus on judgment and strategy. It's not replacing people, it's amplifying what we do. The other game changer is digital money, specifically stablecoins. So what are they? Think of stablecoins as digital version of traditional currencies, like the US dollar, but running on the blockchain rail. Unlike Bitcoin, they're designed to stable in value. Here's the difference. When you send a traditional international payment, your money might bounce through 3 or 4 banks, each taking a clip before it lands 3 days later. With a stablecoin, it moves instantly across borders with little to no intermediary cost. It's like going from postal mail to email. Same message, infinitely faster and cheaper. And Asia is leading the charge. 56% of institutions across the region already use stablecoins for payments, the highest adoption rate in the world. Governments are leaning in too. Singapore rolled out its stablecoin regulatory framework last year. Hong Kong passed its stablecoin bill in May, and South Korea followed with its Digital Asset Act in June. For businesses, this means that a cafe in Sydney can sell to a customer in Singapore and settle instantly without going through the old banking maze. Stripe data shows that businesses accepting stablecoins sell into twice as many countries and see 3 times higher average order values. That's the real future of cross-border trade, frictionless global payments. Another big shift is in lending and money management. Historically, if a small business needed a loan, they went to a bank, filled out forms, and waited weeks and maybe got an answer. Today, financial technology platforms, Fintechs, can assess your business data in real time and approve funds in hours. Stripe Capital, for example, is expanding into Australia for fast, pre-approved business loans repaid automatically as a small percentage of daily sales. No meetings, no paperwork, no chasing. Why does this matter? Because 97% of Australian businesses are small, and they often face cash flow crunches. On average, Australia's small business run negative cash flow nearly 1/3 of the year. Getting quick funding can literally keep the lights on. These fintechs are embedding finance directly into software, their accounting platforms, booking systems, or e-commerce sites. This embedded finance model is quietly threatening traditional banks. When funding, payments, and analytics all live inside the software you run your business on, so who needs to visit a branch? A related trend is the rise of vertical SaaS, software built for specific industry. Think of Xero for accountants, ServiceMate for tradies, or even Fresher for beauty salons. In the past, these were just management tools. Now they handle payments, payroll, and lending too, effectively becoming the financial system for that industry. Across Australia, a quarter of small businesses now use vertical SaaS platforms. In Asia, adoption catching up fast. 14% in Singapore, 8% in France, and 5% in Germany. These tools are turning everyday business into micro ecosystems where payments, invoices, and loans all talk to each other automatically. It's a world away from juggling multiple bank accounts and spreadsheets. Let's talk about how these companies handle cash itself, what we call Treasury. Traditionally, a business might hold separate bank accounts in different countries, pay conversion fees, and wait days to move money. In the new world, money behaves more like data. It can move instantly in any currency, anywhere. Stripe is rolling out multi-currency balances by default, meaning that dollars, euros, or yen can stay in that currency until you choose to convert them. You can also shift funds between teams or countries in real time, issue corporate cards from the same dashboard, or pay suppliers globally with one click. It's like having borderless, always-on financial control center. And for small firms, it's the kind of infrastructure that used to be available only to multinationals. Now let's bring it back to the front line, the checkout. In the past, businesses built their own payment pages, often clunky and inconsistent. Today, smart checkout systems like Stripe's optimized checkout suite has an AI to decide the best payment method, currency, and layout for each buyer. The results? Businesses see an average 12% revenue lift. Localization features like adaptive pricing automatically show prices in the shopper's currency with guaranteed exchange rates, improving conversion by around 8%. Here in Australia, payments platform are gaining traction. Monthly volumes have already topped 200 billion. That's a huge shift away from cards and checks towards instant low-cost transfers. Now let's circle this back to AI, but this time from the billing side. Traditionally, software companies charge fixed monthly fees. AI-driven businesses can now bill based on usage or outcomes. Think pay per message or pay per analysis or even pay when the task is solved. Companies track usage in real time and even trigger automatic top-ups when balances run low. It's a digital version of a prepaid electricity meter, but for computer, power, or data services. For Australia's startups building AI features in their app, this kind of flexible billing will be a massive enabler of scale. With more money moving online, the risk of fraud naturally rises. But here too, AI is making a difference. Stripe's Payment Intelligence Suite uses machine learning to predict and prevent failed payments or chargebacks before they happen. On average, it improves approval rates by about 2%, cuts card testing fraud by 80%, and even fights disputes automatically. It's the kind of background automation that adds up, saving time, money, and stress for businesses of every size. So what does it all mean for Australia and for investors like us at Mont Wealth? It means the center of gravity in commerce is shifting from traditional banks to new ecosystem where software, AI, and programmable money do the heavy lifting. Now the opportunities are emerging across vertical SaaS with embedded finance, recurring revenue plus transaction fees, AI-powered services that automate human tasks and charge by outcome, digital asset infrastructure, which is the rails that make stablecoin payments safe and compliant, and treasury technology that frees up working capital and removes cross-border friction. Now, the businesses that adopt these tools early will grow faster than GDP, just as Stripe's users are already doing, 36% faster than S&P 500. Now, we've spoken before on Pizz-Spectives about digital assets and tokenization value. What is clear now is that we're moving past speculation and into utility. Stablecoins are becoming the connective tissue of global trade. They're not replacing banks, they're making the financial system faster, cheaper, and more inclusive. And when you combine that with AI automating workflows and decision making, you get a new financial internet, one that runs 24/7 with zero latency. For Australian businesses, that means opportunity to sell globally, settle instantly, and operate with the sophistication of a global enterprise from day one. So, to sum it up, commerce is growing borderless. Asia's growth and digital adoption are setting the pace, and Australia's digital economy is keeping up. AI is the new employee. It's faster, cheaper, and can scale infinitely, changing how businesses operate and build. Stablecoins are the new payment rail. Money now moves like data, instantly and globally. And software is the new bank. Platforms are embedding payments, lending, and treasury right into their products. And through all this, we're seeing rewiring of the global economy, a shift that will define competitiveness, investment, and opportunity over the next decade. So whether you're an investor, a business owner, or just curious about where the world is heading, this moment is to pay attention. The future of commerce isn't coming, it's already here. My name is Rob Pizzichetta, founder of Mont Wealth. If you like this episode, please share or like on the podcast feed or even on YouTube. Have a good day.